This is Sunny Fonseca with Mortgages with Sunny. Welcome to my new podcast. On this podcast, we'll be discussing a little bit about everyday scenarios that do occur during a loan process, also connecting with realtors to expand their business, and also giving you some scenarios and tips on purchasing a home. So there's just about a few main loan options. There's FHA, there's conventional, and then there's VA, and then there's jumbo. Now, they all are great loan programs but have different requirements. So for example, FHA is a minimum down payment of 3.5%, and you can go ahead and get into an FHA loan with a credit score as low as 580. Now, if you say 580, well, I could get a FHA loan for 3.5% down payment. Yes, you can. However, there are some certain restrictions when it comes to that. For example, the interest rate might be a little bit higher, but you can get yourself into a home and then always get your situation better and then go ahead and purchase another home. Now, conventional, you want to have a credit score of 700 or above just to get a good, decent rate. And the minimum down payment requirement is 5%. Now, they're both great loans. However, the difference of the two is you do have something called mortgage insurance. FHA has mortgage insurance for the life of the loan. Conventional has mortgage insurance until you have a 20% equity on the property or after 10 years. Now, it doesn't mean you can't change the loan type in the future. However, that's majority of the differences. Also, FHA has something called the county loan limit that has a restriction on the loan amount that you can have, and conventional does as well, but it's a little bit higher. Now, VA is a great loan option for our veterans, okay? VA is funny, but it is a great loan product for VAs, zero down, and depending on your certificate of eligibility, you can either qualify, depending on how much you can qualify for. I've had VA loans that qualify with a credit score as low as 550, but they have assets. And there's, again, it comes to where there's different circumstances to your client. And then jumbo. Jumbo's not the most popular one nowadays. Now, jumbo does have a more different restriction. It does have at least a 10 to 20% down payment. And the maximum loan limit for jumbos is $3 million. Again, that down payment differs based on your credit score and your financial situation. As a first-time buyer, you definitely want to look into different options. FHA and conventional is the best route. The better the credit score, you want to go ahead and get into a conventional, or depending on your credit score, you could go ahead and get into an FHA. They're both great loan products. However, right now, conventional does have a little bit of a higher rate, but if you're based on your scenario, you can go ahead and purchase with an FHA. So they're both great loan options for a first-time buyer. Again, speak to your mortgage broker or loan officer, such as myself, to weigh out your options. So the most common mistake I hear people say is, I don't want to run my credit. I don't want them to run my credit right now because I need to pay this off. I need to pay that off. The number one thing is always have your credit ran. Remember, when you're applying for a loan, you're not committing to anything. It's kind of to see or get advice if there is something that needs to be worked on your credit. You go ahead and speak to your mortgage loan officer. Now, sometimes you don't want to put all your eggs in one basket and pay off your debt. That's a huge misconception. The other misconception is the assumption that they have to be at the same place of employment for 2 years. That's not correct. Always speak to a mortgage professional before you go ahead and assume these things. Biggest mistake also too is let your loan officer know everything ahead of time. Like this, we can help you get to the finish line faster. So if you don't tell your mortgage broker or your loan officer every scenario possible, then what happens is once you're under contract, and remember, these underwriters check your 7th grade locker number. And if something comes out, that kind of puts everybody in a sticky situation. Your realtor, the seller's realtor, me, you. So you want to be mindful. Just be straightforward with your mortgage broker or your loan officer so that they can help you now and get to the finish line quicker. The way I work is once I go ahead and have all numbers ran for a client, I go ahead and weigh out two options. I schedule either a Zoom call so that we can put numbers into play. Depending on their situation, again, depending on their credit score, how much they qualify for, or their income, or their certain restrictions, I go ahead and weigh out two options. This is how much your cash to close or your rate would be on an FHA, and this is how much your cash to close on your rate would be on a conventional once we have those numbers into play. After that, it's up to you. Now, also too, these loan products have a certain requirement on the house that you choose to purchase as well. So for example, FHA, if you find a home and you think, oh yeah, well, I could fix this and this roof is caving in, the FHA won't allow that. Okay, neither would conventional at times. So those are conversations that we need to see. Make sure you speak to your loan officer again. So once we put numbers into place, we go ahead and weigh out two different options on the loan product. And from there, you go ahead and approve what works best for you. So important to have that connection with your mortgage broker. One thing is, you don't want to assume when a client is asking our realtors, hey, what type of loan product or what down payment or what rate or what scenario. I always tell my realtors, hey, if they have that specific questions, go ahead and have them call me, because what if? Okay, there's always different scenarios, different options. We don't want them to be intimidated with the process as well, because it can be intimidating applying for a home loan. So we don't want them to be intimidated. So definitely have them reach out to your loan officer or your mortgage broker and have that conversation. Hey, listen, you're not committing to anything. This is just to go ahead and get you to the start, just so that you have an easy process to get to the finish line. Now, we do have a whole different portfolio when it comes to our investors. Now, investor is kind of tricky, but you have to be ready for it, right? If you are not ready for these type of loan products, then you're not an investor. So straightforward. Now, there are different loan products such as the DSCR, there is bank statement only. There are several different loan options for investors such as DSCR, no income, no ratio, and bank statement only loans. Now, these are considered non-QM loan products. The down payment may be a little bit higher, the rates are a little bit higher, but these are made to go ahead and have your investor be in and be out, okay? Now, these loan products, they're not cookie cutters sometimes, but if you have your ducks in a row and you have a preferred mortgage broker that's worked with you in the past, or contact me to have your paperwork and your income and everything ready so that you have this plan with your mortgage broker once you do go ahead and purchase a property. DSCR loan and bank statement only loan is one of our most popular products for investors, for business owners, and etc. So definitely go ahead and weigh out your options. Speak to a mortgage professional. Don't just think and say, oh yeah, as an investor, I need to buy cash, or I need to put 20% down, or I need this. So there are definitely different scenarios to work with. Now, qualification process for investors may be a little bit different if you decide to go with a non-QM loan product, which is a DSCR, bank statement only, and or no income, no ratio. The process is different for non-QM loans such as DSCR, bank statement only loans, or no income, no ratio. Definitely, once you do speak to your mortgage professional, you should have all your ducks in a row, and they can guide you on what documentation is needed to go ahead and pre-qualify for this type of loan product. Conventional is pretty much cookie cutter. You do have to have a 20% down payment, 2 years of tax returns as a business owner, and then other things may apply to it. So like I said, I can't diagnose you until I have the blood test, but there are two different type of loan products and two different requirements.